Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's pack program, I'm going to be having a look at the two price levels to confirm the last phase of the Bitcoin bull market and why you really need to pay attention to these two levels. I'll also be having a look at exactly why the market hasn't topped out yet when we use a certain technique called the arcs. And as per usual, we'll have a look at the wider markets to see exactly what's going on, what's driving the Bitcoin price. So if that sounds interesting, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Before I go into the two price levels to confirm the last phase of the Bitcoin bull market, I want to have a look at this chart here, which I haven't presented for quite a while, and I think it's very important to keep everybody grounded. These yellow trend lines are called arcs, and you'll get them on the left hand side. If you click this here, and if you go down the list here, you'll get it down here called arc, A-R-C. And for me, the visual tells you that the market has not topped out. The problem with this market is that as soon as you get a little bit of a pullback, a little bit of a correction, a little bit of a consolidation, you have these perma bears who are basically saying that the market has topped out. So what this technique does is it gives you a visual on the longer term time frame here, especially to show you exactly where you are in these cycles. So for instance, in this first cycle, you can see quite clearly that once you draw a few of these points on this yellow trend line, it's only when the price goes past the arc that you realize that the market has topped out. So what this does is, it doesn't help you to get the top, but it prevents you from riding the bear market all the way down here. And similarly, in the second cycle here, you can see quite clearly that the price rides the yellow arc all the way up, and then somewhere along the line, it falls out of it. And that's your cue to avoid this, riding the market down. And similarly over here, once it falls out of the arc, you can avoid this pitfall down here. And in the current cycle, what we've got here quite clearly, if you look at this, just the size of this move here from the bottom to where we are, compared to from the bottom here to where we were there at the top of the bull market, and from here you can see quite clearly just the size of the actual price action since the bottom of the bear market. So the current cycle is clearly in a premature state at the moment, and obviously it will mature once the market tops out. So just by looking at the visual, just by looking at a very simple trend line like the arc, can actually take away a lot of the emotions out of the market. And I wanted to show you this so that everybody's aware that once we get past this yellow line to the right of it, once you cross over, that is the time to just get out if you haven't already got out before then. And with the current cycle, you can see we're quite close to the yellow line here. So I would expect some sort of a big move to the upside here, and that's the last phase of the bull market. And this is now what I want to have a look at. I want to have a look at two signals just to keep our focus here. I have touched on them in the last few videos, but I wanted to put them in this video to bring it together with the bits and pieces I wanted to present today. Okay, so I'm just going to go on to the two signals, and I just want to give you the background to how I got these two signals. Firstly, one of the private members asked a question, how do we know we're in the parabolic phase of the bull market? And I thought that was a great question, and it would add value to a lot of people. There has to be a point which confirms that we're in the last phase, the last 4, 5, 6 months of the blow off top to come. And if you've been watching my videos here, you'll know that one of my favorite indicators is the pi cycle. And when you put the pi cycle on, but there is one problem with the pi cycle, and I'm going to go through that with you here today, cycle by cycle like I normally do, but there is one problem with it, and that's why I had to look for a second signal for everybody here. So I'm going to be on the daily chart here in the first cycle, and we have the red line of the pi cycle running through, and you've got the green line here. So after the halving, this is the first halving back in 2012, once you get past the halving, the first signal to confirm the last phase of this bull market will be when we have a daily close above the red line. And as soon as it does that, you'll see that the trajectory just moves in an incredibly sharp gradient to the top of the bull market. The problem with this is that it's quite far away from some of these lows down here. So I wanted to find another reference point before we get to the red line, which actually confirms the last phase of the bull market. And that was that before the halving, we always seem to make a previous high to the halving here. If you put an orange line there, you can see that once we close above that orange line, it doesn't actually come back below that orange line again. So with that reference point, what you get is from the orange line to the red line where the daily close was there, you can save yourself another 23%. So that 23% makes a difference as you're going up. So what this does is it captures more of the profits for you before you get the actual confirmation that we're in the final phase of the bull market. So this one gives you a pre-confirmation of this reference point here with the red line of the pi cycle. And similarly, in the second cycle, we can see quite clearly that after the halving, the price doesn't get above the red line until this candle here, which is quite a way above some of these lows at this point. So if you're waiting for the actual confirmation of the last phase of the bull market, you may have to climb on board at quite a high price. Whereas if you looked at the halving and the previous high to the halving here, you can see that once you cross that line, which was at this point, it came back and retested it, but we didn't fall below this line again. So before the pi cycle confirmation, you can get in at this point. So from here to that actual confirmation at this point would have been 119% increase. So you wouldn't miss this move. So these are the two signals you see on every cycle. And if you look at the third cycle here, after the halving, one more time, if you look at the red pi cycle, it breaks up over here. That is your confirmation for the last phase. However, if you looked at the previous high to the halving, which was this point here, once we'd cleared this over here, you could see that it didn't close below the orange line again. So this was a good prerequisite to that confirmation of the last phase. So if you take it from here, where it broke up at the top of this green candle, to where the actual confirmation was, you're talking about another 106%. So again, this technique gave you another 100% start to the beginning of the last phase. So this brings us to the current cycle, and this brings us to the current cycle where we have this halving here. The previous high to that halving was this point, the high of which was at 72,700. So what we need to do now as the first signal, the prerequisite, the pre-confirmation of the last phase of the bull market, which is going to be way up here. This is an incredibly good reference point that if you haven't got on board with Bitcoin, just by looking at the previous cycles from a historical perspective, it's giving you a clue that once we go past this line here, 72.7, with this price action here, wherever it's going to be, we could consolidate for quite a while yet. But once we break above that, the probability is that we're not going to close below this orange line. And if it does, it's just extra information because there are always anomalies within the charts. The charts are always rhyming, they're not being exactly perfect. So with that broader, wider perspective, once we clear this orange line, then even if you get a daily close below it, it doesn't really matter. It hasn't happened in the last 3 cycles. But if it does happen in this cycle, it's more than likely to be a temporary blip on its way to the upside. And you can see here quite clearly that the red line of the pi cycle is at 91,000 now. So by the time the price gets up here, this trajectory is going to be more over the $100,000. So those are your 2 signals. But the first signal is this one here that you've got to be really looking out for, which is 72,700. And in last week's video, I was trying to give a further third signal, which was based on the weekly time frame. And that signal was really the close of the weekly candle. I think some people must have misheard me, and it caused quite a bit of controversy about this price, because the closing price here on the weekly candle currently was following a pattern from the previous 3 cycles. And that is that at the halving, whatever the weekly closing candle was, like this one is here. If you look above here on the C, this candle itself is 64,958. Just to reiterate, it's a weekly candle, not a daily candle, not an hourly candle. So what happened was in the first 3 cycles, and I don't want to go through each cycle with that, is that at the halving, whatever the closing price was on that halving candle, it was the same pattern that followed. And the reason why I wanted to show that was because quite a few people had asked me, how low can we go? So before we get to the 72,700, so before we break this orange line here, before we do that, what you have is extra information based on the previous 3 cycles that at the halving close of the weekly candle is the same pattern that's developed in the 4th cycle, what happened in the first 3 cycles. And that is, if I bring this orange line down here, at the bottom of the close, of this weekly candle, the price falls below this after the halving, this red line. And then once we capture it with this candle here, which we've already done, the probability is that the price is not going to close below this orange line on a weekly candle. So the question is, what happens if we close below this line? Of course, it all depends on your mindset. If you've got the mindset that the charts have to be correct, and if one candle doesn't fit that narrative, you're going to throw the baby out with the bathwater. That is not the right mindset to get to over here. Anybody who reads the charts will tell you that this is a probabilities game. There are no guarantees or certainties. What we have to do is elicit the most amount of information so we can make the best decisions. So the way to look at this is that if the first 3 cycles here were showing you one thing, and then in the 4th cycle, with a candle close below the level where it shouldn't have done, what it's then telling you is that we now have 4 cycles, and 3 of them were telling you one thing, but a 4th one was telling us a different thing. So when we get into the 5th cycle here, we have more information that looking at the previous 4 cycles, that 75% of the time, we will know that when we get to the halving and the closing of the weekly candle, the probability is that the price is going to behave in a certain manner. And how that impacts on our decision is that if in the 5th cycle, you're looking to get into the market and you know this information, and this is a probabilities game, what I would do is if I've got cash in the 5th cycle and I see a weekly close at the halving, then I'm going to play a 75% probability game that it's better for me to get in at any price around that level, because the chances are, the probability is, it's not going to go much further than that on a weekly close. Of course, within those 7 days, it can actually wick down. And even last night, it closed slightly below that level at 64,958. It closed here at 64,943. But we still have Friday, Saturday, and Sunday to go. So we have 3 more days before this candle closes. And if it does close below here, like I say, that tells you that in 3 of the 4 cycles, it behaved in one way, and in another cycle, it behaved in a different way. But from a probabilities point of view, 75% accuracy is incredibly high. You have to look at the markets with that mindset. If you're going to throw the charts away because one candle is out of sync with 3 cycles, then you really don't have the mindset to get to this point here. You don't have that patience. See, we're on a journey from where we are here to this point here, wherever that's going to be. It's going to be 200,000, 400,000, 500,000. But it's not easy. This journey is not easy. You need a certain mindset to get there. And if people are going to get into a conflict with one weekly candle that's trying to give you a great amount of information here, this analysis that only came about because people wanted to know how far we would go below where we are now. And it looks with a higher probability that this candle will probably close above that level of this halving candle here. But we'll wait and see. But please take a holistic view, a wider perspective, and a bigger picture view of all these things, and elicit whatever information you can get. I didn't realize it would cause such a conflict, because within a few minutes of posting this video, I got a series of negative comments. So when somebody's talking about a weekly candle and people have only got the time span of a few minutes, it really isn't going to help you in this journey, which is not going to be easy. And I certainly wasn't wanting to cause conflict. The only conflict I've had in the last 30 years is choosing between a Snickers bar and a Mars bar. So I hope you found that useful. So just to come back to these targets. We've got this first target here of 72,700. So from this weekly candle close, as per the previous 3 cycles, we have a very good idea that with a higher probability, so far 3 cycles out of 3, and this candle closes on Sunday, the probability is that we've probably bottomed out here. So this is giving us a good entry point for those people who haven't got in. Then the confirmation will be the 72,700, and the final confirmation will be the red line here. Okay, I'm going to do a bit of personal development in terms of the mindset needed to succeed in this market. And this is very important, because if you've got the wrong attitude in this market, what's going to happen is that you are going to commit what they call self-sabotage, which is basically you're going to make decisions based on panicking because you don't have the right information available. That's why I want to spend a couple of minutes just to try and formulate some sort of a template or a frame of thinking of how to deal with these markets, because they are challenging on an emotional level, and why emotion is a money killer. when it comes to these things and why people can't sit still. I'm going to have a look at why taking a holistic view when reading the charts will actually make you a lot of money. And it comes back to this particular quotation I've shown you many, many times. Your attitude and not your aptitude will actually determine your altitude. How far you get in life will depend on this very big word here called attitude. And also this quotation fits in with the right mindset you need to navigate through these very complex markets. And that is that if you change the way you look at things, then the things you look at also change. And the two most important quotations, which are really to do with patience and why people can't sit still, is because they don't have the knowledge to be able to sit still. So what Jesse Livermore is saying here is that it isn't the market that beats them. They actually beat themselves because though they have the brains, they cannot sit tight. And again, money is actually made by sitting, not trading. So all these people trying to get in and out, while you may be successful once or twice, but over a 4-year cycle, the market will beat you. Unfortunately, that's just the way it is. And that's what experience tells you. And you can see from this quote that 90% of retailers will actually lose money. And the question people ask is, how is that even possible when you consider what's been happening to Bitcoin? So if you measure in the last cycle, it bottomed out at 3,100 and reached 69,000. So that was a 21x from the bottom to the top, and yet 90% of people actually lost money in this simply because of their attitude. And this is why this is an important topic. So with this particular mindset, I'm going to show you an example of how it can lead you to actually making a lot of money here. So with this example, I'm going to show you why looking at the previous cycles can actually make you very wealthy, even though the cycles may not play out exactly as you want them to. And the first rule with the markets is that the market is always right. Never forget that. The market is always right. If you forget that, it will clobber you. So when I was wanting to buy in the current cycle, as the market was coming down here, I looked through the history and I found that with the 4-day chart, so what we have on the charts is the blue line, which is the 30 exponential moving average, and the white line, which is the 200 exponential moving average on the 4-day chart. And what we've got is that in the first cycle, we didn't have enough data there, so we can't really look at the first cycle. But what the second cycle did was to look at the cross between these two, i.e. the 30 crossing below the 200, and that was exactly at the point of the bottom there. Second cycle was exactly the same. It was right at the bottom at 3,100. So when this pattern came along with 3 other indicators that I showed in my videos in the middle of June in 2022, this crossed here at exactly 17,000, as you can see there. And this was my first entry. So I waited all the way until I got this cross. This is where the patience comes in. This is where the knowledge about the markets comes in. This is where the cycles come in and how they can help you to get the entries without the emotions and to just take a clinical decision. So this is where I entered 75% of my funds, and using other indicators just like these on a cyclical basis, the 15,400 at the time, and I obviously entered into the Bitcoin miners. So these were my 2 points. I went 75% in here and 25% in here. So how did that affect my portfolio? So I just want to show you how just by sitting tight and being patient and taking a holistic view of the charts, how it can give you very good outcomes in terms of the wealth it can create for you. So just by using the cycles and the various charts and sitting tight and being patient. So that was really part of the portfolio that I created in June 2022 and December 2022. And at the start of January, I started the private member section with the Bitcoin miners here. And these were the actual allocations and the choices of the Bitcoin miners that we got into. And with a start of about $100,000 here, we ended up with $434,000. And since then, we've converted this $434,000 from the beginning of 2024 to currently into 2 portfolios. The first portfolio is where you do nothing at all until the end of the bull market, where you basically sell everything. And that is currently up at $503,000, where we actually do trading through what we call ratio trades. And so far, with about 20 trades, since the beginning of 2024, the same amount of money that we started with has now gone to 638,000, and our target is 5 million. So you can see that a simple change in the mindset can help you get in at the low points and hopefully at the high points, which is what we're wanting to do here. As we've seen that 90% of the retailers are just not going to get here. And if they're going to get here, they're going to actually make silly decisions along the way. People are going to make some very emotional decisions between where we are to where we want to get to. And what we have to do is take the emotion out of it and just trade or invest without the emotion in order to get us to this point here. And the question is, do you want to be part of the 90% or the 10% who are going to succeed here? And it all comes back to one word, and that is attitude. And there is one phrase that always comes to my mind when I look at how people think of these things, and that is that if you want more in life, then you have to become more. And what that really means is you have to change your attitude. You have to change the way you look at things so that the things that you look at also change. Okay, just moving on to the ETFs and the asset inflows, we can see quite clearly on the 1 day, the figures are actually all virtually in the red here. So this explains why the Bitcoin price has been quite subdued, hovering around the 65,000. And the 7 days, i.e. the last 7 days, you can see it's been very, very much in the red as well. So this is a good part explanation of why we aren't actually going up. But once the money starts flowing into the ETFs one more time and these figures become green, then we can expect the trajectory to start moving to the upside. A quick look at the wider markets. SPX, you can see quite clearly the trajectory is to the upside. We're powering ahead into the 60-day cycle end here. So we can expect a little bit more before the cycle end. So we will get some sort of a correction somewhere along there. But you can see the overall trend is still to the upside here. And markets were closed yesterday, so we will have more information at the end of today. And the dollar is still within this symmetrical triangle. We're getting to the last bit here where it will have to make a decision which way to go. And it's coming up to a resistant point here at the moment. So we'll see what happens. There's a good probability this is going to come back down. And we've had 3 touches down here at the moment. So it may well be this is where it breaks down. Looking at gold on the weekly chart, we're having consolidation at these levels at the moment. And after the breakout from its neckline over here, we can see that it's consolidating at a higher level. We could come back to the 61.8, which is our expectation based on these candles that I've shown you in the past. So there is some sort of a bearish pressure, but we are in this consolidation, which is setting itself up for a big move to the upside. And similarly for silver, we seem to have these little consolidations here along the way, and we're having another one currently at the moment. So again, this is setting up for a big move to the upside. So all the wider markets are looking quite good and quite bullish at the current moment as I see them. And looking at the 60-day cycle with Bitcoin, we seem to be on a negative trajectory at the moment, but we are finding support at these levels at 64,000. And the end of the cycle is coming into view here. So we may well have bottomed out on this candle, and the low of that was at 64,032. So keep an eye on this candle. Of course we can come back a bit lower, but even if this goes down to the 60,000, this would be a great buying opportunity. That's how I would see it. And I would be willing to buy more of the Bitcoin miners if they came down. If the Bitcoin came down to 60,000, I would see that as a buying opportunity to get more into the Bitcoin miners. So we may well be setting ourselves up for the start of a new cycle now here, because we are getting deeper into the 60-day cycle. And once again, this 60-day cycle framework gives you a timeline of where Bitcoin is. It's an incredible tool which gives you some sort of a planning and organization of what the Bitcoin price is doing and where it's more likely to bottom out and start the new cycle. Okay, so I'm going to leave it there. I hope you found value in the video. And if you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.